One interesting example of that is the investments that we've made in alternative energy in anticipation of the end of oil. But many of your listeners will be surprised to know that humans have invested now almost 5 trillion US dollars in alternative energies over 40 years. And we've reduced the market share of fossil fuels from 82% all the way down to 81%. We've had a 1% decrease in the market share of fossil fuels with the investment of almost $5 trillion over 40 years. So what you suggest is true. Markets work, but markets are messy and they take time.
Today, we have a thought-provoking interview with renowned investor Rick Rule. In this captivating discussion, Rick challenges conventional wisdom and offers a unique perspective on the future of energy and natural resources. Rick shares a surprising fact. Despite nearly $5 trillion invested in alternative energy over 4 decades, the market share of fossil fuels has only decreased by 1%. He argues that markets are messy and take time to adapt. He emphasizes the need for diverse energy sources, including solar, wind, nuclear, oil and gas, hydro, and batteries. But there's something else. Rick unveils a profound truth that the world often overlooks. Over 1 billion people lack access to electricity, and 2 billion have only intermittent and unaffordable access. The challenge of lifting up the bottom third of humanity is immense, but it also presents incredible opportunities for natural resource investors. In the second part of this interview, Rick delves deeper into the importance of humanity and the potential for increasing material well-being across the globe. He warns about the potential volatility and risks that lie ahead, making the next 10 years less benign than the previous 4 decades. Don't miss the rest of this eye-opening conversation with Rick Rule, as he shares his insights on solvency, the future of global trade, economic nationalism, and the potential challenges and opportunities that lie ahead for resource investors. Stay tuned until the end for a truly enlightening perspective that will leave you contemplating the future. Hit that subscribe button, and let's dive in.
I think the world is going to need more of all kinds of energy and all kinds of resources. Solar, yep, but not in Germany where the sun doesn't shine. Wind, yep, but not in places where the wind doesn't blow. Coal, I know people hate to say it, but the largest year in history for coal demand was 2022, and 2023 is going to be bigger. Nuclear, yep. Oil and gas, yep. Hydro, yep. Batteries, yep. Room for everybody. 1 billion people on Earth, 1 billion people have no access to electricity. Another 2 billion people on Earth have access to intermittent and unaffordable electricity. And those societies where populations are growing faster are precisely the societies that are underserved with regards to meeting their citizens' material needs. These trends are absolutely inevitable trends. We've done a great job as a species in the last 40 years, lifting up the poorest of the poor, taking people from desperately poor and starving to merely poor. That doesn't mean that more doesn't need to be done. It does. And that requires more energy sources of all types. Very much. We will offer up a paradigm around the way the world is rather than the way that the big thinkers would like you to believe. We will offer up the fact that the world is growing and that providing for the material needs of humanity is an important ESG consideration, which means that we'll have wonderful big picture thinkers, but not the kind of big picture thinkers that you would see on CBC or CNBC. A contrarian point of view that is more arithmetically oriented than narrative oriented. Importantly, if you come to agree with that point of view, if, as an example, the fact that the market share of fossil fuels has fallen by only 1% over the last 40 years comes to you as being something that's worthy of consideration, we're going to have a lot of analysts and portfolio managers at the conference who have been invested in natural resources, interested in natural resources for 30 or 40 years, not people who learned to spell lithium 3 years ago, but rather people who have made their living investing in money in natural resources through thick and thin for a long time. So precisely the issues that you talk about and precisely how to make sense of them in your own portfolio, or at least in the natural resources and precious metals part of your portfolios, specifically what the conference is about. The theme 20 years ago was the emergence and the urbanization of China. I would argue that when Deng Xiaoping said to be rich is glorious and began the process of urbanizing China, taking 450 million people out of desperate poverty and moving them into this century, that a couple things happened. One, China became structurally much richer as they became marginally less free, at the same time that consumers in the West met 500 million competitors for material goods. I hope, frankly, for a whole bunch of reasons, that the Chinese success in increasing the material well-being of its citizenry comes to be matched or at least approached by India, by Indonesia, by Nigeria, by Ethiopia. The lifting up of the bottom third of humankind is the greatest challenge that humanity faces, and it's also the area of greatest promise for natural resources. In the West, David, we think of battery materials around what will Tesla's market share look like in 5 years? That's the icing on the cake. Providing basic electricity to 1 billion people and then furnishing their lives so that they can take advantage of the electricity. Increasing per capita consumption of natural resources over billions of capitas is the real story. The idea that the purveyors of the world's reserve currency have $130 trillion in net present value of recourse liabilities, and they attempt to solve that with a budget that's in deficit, $2 trillion a year. I think that's an interesting one. But I think the most important one, and I don't want to be, I don't want to come across like some sort of granola eater, but I think the phrase that people need to keep in mind is humanity. We need to keep in mind that while we've done a wonderful job increasing the material well-being of the bottom third of humanity, that there is still a job to do. If we allow those people, if we get out of those people's way, they will become more rich and they will want to increase their material standards of living. So for resource investors, at least, I think humanity is a more important phrase than solvency. For other investors, they need to pay real attention to solvency. The paradox that our individual creativity and tenacity so far has been enough to finance our collective stupidity is a wonderful thing, but it's something that scares me on a going forward basis. I think that we lived through a time of 40 years, 1982 to 2022, of very benign economic climates, declining nominal, declining real interest rates, relative peace on a global basis, the impact of technology on societies and also people. Again, I don't want to sound like an ESG warrior, but inclusion in the workforce and the breakdown for a while of economic nationalism, the increase in global trade. I think for the time being, all those things are over. I don't want to seem like a doomster. I think that what we face is easily survivable. But I think the next 10 years are going to be much less benign than the last 40 have been. And I think that in addition to facing real risk, that we're going to face volatility of a type that most investors haven't experienced.
As we reach the end of this captivating exploration into current economic events, I hope you've gained valuable insights into the ever-evolving financial landscape. Remember, staying informed about the latest economic developments is crucial in today's interconnected world. By understanding the forces shaping our economy, you can navigate the uncertainties and seize opportunities that arise. Whether it's market fluctuations, policy changes, or global trends, staying engaged with economic news allows you to make informed decisions that impact your financial well-being. Stay curious, stay informed, and don't forget to like, comment, and share this video.